Hello, it's Cryptolyze. I hope you are well this Monday, 1 January 2024. And yes, this is the first broadcast of 2024, and it is with pleasure that I spend it with you. Today we're going to talk about crypto news. Obviously, we're going to make a little point. And then we're going to have a really year-long vision, quite simply, to project ourselves on 2024, on what happened in 2023, on what will happen in 2024. And the projection we have, whether we are rather bald or not, compared with previous years, and really plan ahead. You will see that there are certain things, particularly on macroeconomics, which are really very, very bullish. And you have to understand them well to be able to benefit from them in 2024 and 2025. It starts right away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. Obviously, we will have to talk about the 2024 roadmap for Ethereum. I'm not going to really go into the subject. I think I'll do a specialized show on Ethereum. Vitalik Buterin shared his update in 2024 for his flagship Ethereum project that we all know. 2022 was marked by a very important event, which was the transition to proof of stake, the merge. And 2023 was the update of the application and the fact of being able to withdraw the different cryptos. So the Ethereum that we had stacked on, precisely, the Bacon chain at the time, which was the network testing of Ethereum. So what is interesting to see is that we expected a lot, including me, in 2023 from Ethereum's performance. That wasn't the case, not at all. We had something that was even underperforming compared to BTC. And it's true that 2024, 2025. We once again expect a lot of things from ETH. But will it happen or not? In any case, what is certain, and what I am telling you here in relation to the roadmap that was given, is that they worked like crazy in 2023. We have a lot of things that have progressed. And I'm going to make you a specialized video on it because it's really important to go over everything they gave us information. And you will see that there are so many things that, yes, it is true that I think that 2024 and 2025 will be explosive years for Ethereum and for cryptos in general and everything which is the Ethereum ecosystem, so everything that revolves around it. Then we continue in the news with, unfortunately, the last hack of the year, which took place at the end of the year. $81 million on Orbit Chain Bridge, which was hacked, and once again, it is a bridge. So as a reminder, bridge is what allows several blockchains to interface with each other and transfer funds and cryptos from one blockchain to another. And it's always the attack vectors that are favored when we look at the majority of hacks that are carried out. It's linked to bridge, and that's really a very big security flaw that we've been seeing for a while time. And unfortunately, we still have no solution. The only solution would be to see an interoperable protocol, or in any case an interoperability layer sufficiently secure to not need a bridge, and sufficiently secure to avoid having hacks. That, we have a few projects in mind, we have already talked about it several times, but it will really be, for me, the vision that we can have on 2024, 2025, being able to find security solutions and secure interoperability transfer. Until we have that, unfortunately, it will be very, very complicated. We will have to stay on assets which will be so powerful that we will not look for other assets, implying Ethereum and BTC, of course. Besides, speaking of BTC, we will necessarily talk about ETFs, because it will be our start of the 2024 year, which will be very important. We have January 10th in mind. It's true that it's getting very close. In any case, we have a whole narrative that is geared towards January 10th, so I have already explained to you several times that potentially it may not be January 10th. But it is true that there, given the clusters of clues, there is a great possibility that it will be January 10th. Or in any case, that we will have a wave validations at this time. And so many that we actually have the SEC, which could notify, even if only already this week, at the beginning of the week, whether or not we would have a launch. And once again, you just have to take a little step back. It's not because we have a launch, a validation from the SEC, that immediately the ETFs will be made available for purchase, and that we will have a flow of liquidity. Okay? It always takes time. It's not because we have validation that the ETFs are put into action straight away and that we have people who inject liquidity. Take into consideration that it will take time. We have the notion of pre-unding, which is happening, but it remains only pre-unding. And the other element, which is important, we find it here, hidden here. But it's interesting to see it in the other news, in which we have Fidelity, which is one of the players which precisely offers a spot ETF and which offers management fees at 0.39, it is really very low even in the large ETFs that we have available. Generally, it is more than 0.3. It is rather even in the 0.4, 0.5. There are some has a few which are below 0.4, but it remains relatively low, and generally it is the best on the market. And so that means that there will really be a battle around management fees, therefore the desire to drain as much liquidity as possible because it is a financial windfall which is enormous. Imagine 0.4, I will simplify, but 0.4 of the totality of what is invested in the ETF in management fees every year. And it falls by itself and it's automated, so it's really the most profitable thing. And so that means that there will really be, I think, a race behind to drain as many funds as possible. So that's why we have all the advertisements that are being put in place. I think that we will not necessarily have the acceleration immediately upon launch and validation by the SEC. But on the other hand, as soon as we have the machines available and the product is put on sale, and we have the liquidity that starts to come in, I think we will have a machine really very strong in marketing Bitcoin, at least through their ETF protocol. So that means that we are going to have a start to the year that risks being quite rock and roll, whether through the upward acceleration of the validation of the SEC, the possible sell the news which risks follow subsequently, and then the arrival of liquidity with the halving, and therefore a re-acceleration on 2024. This is the general vision that I have already had for some time and that I have already been defending to you since a while. Moreover, in this year's bond deals, we have ZoomX, which is launching a competition for the start of 2024 trading. So the big interest with that is not necessarily the competition itself. It's all that there is around it. That is, if you want to test a new exchange that is non-KYC and in which we still have a lot of liquidity being that it is connected to Bybit, we still have incentives that are made available. That means that we will have always cash prizes that will be available. We will certainly have dollars that will be given. I think it's $20 upon registration if we make a first deposit. We will have lucky draws next to it. So the fact of being able to collect additional rewards, and then we have less 25 on our trading fees. So it's always a good way to test a new platform if you're ever interested. In fact, I created a team that we are going to launch to be able to take advantage of it and take part in the game of competition and be able to benefit from all the rewards that ZoomX offers us in this way. I created a team. The link is in the description and in the comments if you're interested. In any case, it's always the right way to be able to test the platform, especially since I understand that they will soon arrive on the spot, so there will be a lot of things that will evolve. It could be a platform that could do like BitGet a little while ago, so I think that these are a bit the ambitions they have. So it's interesting to check. On the macro part, always annual vision in which we see this magnificent candle which closed. A candle which is really very important. The fact that we closed above here, that implies that on an annual basis, listen carefully to this sentence, that implies that on an annual basis we have in fact annihilated the fall that we had in the 2 years previous ones. It's really very important to understand that. It means that we closed above, so that implies that we simply took over the whole of this candle. It's something which is excessively bullish. It's really very, very strong. That doesn't mean that we're going to go down like that continuously, okay? That means that we can very well have a very big retracement. But in any case, in the years to come, that means that the S&P 500 and the NASDAQ, because it's the same on the NASDAQ, we can go for targets that are very high. So that means that we can have the start of a recession in 2024. In any case, 2 quarters of recession. A small economic difficulty in 2024 with, why not, the instability linked to the American elections. But then to leave again, I think we will leave very, very strongly. And this is precisely one of the operations that I will try to carry out. Here, throughout this year, I have been very long, so I bought back a lot of this lower part. I bought low. I accompanied the upward movement. And I think that I will systematically buy back when we make dips on the S&P 500. And I still have my targets. I still have them. I gave them to you last time. And it will be the same principle in any case. What is sure and certain is that the American economy is doing much better than expected. And the soft landing is in. Being done correctly, that doesn't mean that we won't have a small recession, that we won't have a small economic shock, because that's quite logical. And then, people will tell you that it's a crisis, that it's catastrophic. Well, actually, that's normal. It's the same. I was one of the rare ones a year and a half ago to tell you that, all in all, things were going to go pretty well, that we were going to head towards a soft landing because the economy was rather resilient, and it was going to go pretty well and actually running 2023, especially since the summer 2023, from the moment everyone shifted. I started to tell you, be careful, it's likely that we'll have a mini recession which is coming because we will have a shock. because everyone thinks it is good and we risk having a shock. I still think that we will have an economic shock that will arrive, but which will be relatively weak, and you will see that everyone at that time will cry crisis. And then we will start to rise again, and it will be an opportunity to buy the fear of others to, once again, support the upward movement. And it's really very beautiful what's happening. In any case, it's really proof that we really have a U.S. tech economy that is really very strong. Well, okay, we're not going to hide it, really managed by a handful of companies. But in any case, we have a form of enthusiasm which is taking shape, and which will be interesting to see is that in 2024-2025, we would see the establishment of a bubble around artificial intelligence, and in which we could benefit, whether at purchase and also sale when it breaks out. That, in any case, we will cover it on this channel. Another thing, obviously, we are going to talk about oil, which is very important in this year, where we see that we have nevertheless stabilized well, and that especially when we remove this wick, this enormous wick linked to political instability, international geopolitics, we see that we are still in a structure which is in a form of range between a lower limit at 40 and upper limit here at 110, and even we have a sub-angel which is here for me positioned between, this is the range that I has been giving for a long time, 65 and overall 90, 85, 90, which are key areas to monitor, which make it possible to maintain inflation, which also make it possible to maintain the economy of OPEC. Therefore, of all producing countries which need to maintain a relatively high price of oil, and behind the consuming countries which need to have an oil price which is not too high. And there, it's really going to be, I think, the struggle that's going to take place. And the struggle, generally when it's like that, what does it happen over? On the establishment of a range, we must not kid ourselves. When we have a fight, we will oscillate between two limits, a high limit and a low limit. And when we have a winning side, at that moment we have a trend. So a trend that will set in place, I don't think that will be the case in 2024. It will not be the case in 2025. We will have to wait a little further to really have something that will come out. And this is something that we also find on here, government bonds. Why am I talking about both? Because quite simply, here on oil, we will have the notion of inflation. The notion of inflation will have a strong impact on American monetary policy. 2024. We are not going to kid ourselves. We know that there is going to be a pivot from the Fed. I do not think that it will be as precipitous as expected by the market. But in any case, I think it risks being relatively violent. And if that is the case, it will be because we will have the establishment of a mini crisis. And therefore, at that moment, we will have an overreaction of the Fed in which we will have a very sharp drop in rates. Overreaction of the market with an upward reacceleration. End of the crisis and so on. Something that will cause a bearish breakout. Change in the Fed's monetary policy, pivot, reacceleration of stocks, and then we start again. The increase in necessarily American bonds, which is the tension that we find on the economy and behind America, therefore the financing of the American state. We see that we are at 3.8. For me, I think that we will quickly retest the 2, which will be a key level and which will be held, I think. We have a first level, which will really be the 3. But we will really fit between the 2 and the 3, or even perhaps a little lower. But I think that we will not really arrive at below both. And why both? It's because for me, I think that we will arrive at a neutral rate, a neutral real rate. What does it mean? That means the rate at which one is paid on yields like U.S. bond rates, minus inflation. I think we would oscillate between the 2. That is to say that if we have inflation which is 2.5, we will have a rate which will be in the 2.532, and therefore we will be between 0 and 0.5 or less 0.5. And therefore the fact of having a rate neutral, always remember that it is when we have a positive rate, well, a real rate. When we have a rate which is positive or even neutral, that means that we are not looking for risk. We have a negative rate. We will seek risk, and therefore we will seek exposure, for example, on risky assets, stocks. Or why not general cryptocurrencies, not necessarily BTC, the position of BTC. Besides, it has a little connotation, and it will be interesting to take a little look at it, because yes or no, has BTC on 2023 arrived as a safe haven? So I've seen a lot of analysts say that, yes, I think that's not yet the case, and it's really going to be 2024, 2025, that will have this answer that's going to be really important. And that will be the reaction of the institutions compared to the ETF, which is in progress. Are they going to use it as a component of a composite product made available to institutions precisely to seek risk? Or is it going to be used as a share of digital gold? Therefore, with a safe haven in relation to different crises, it will be a big question which will have to be monitored, especially since here we have a dollar, which is the same for this year. We see that we remain in the trend. Okay, we are in a downward trend on the Strength of the general dollar, so it is very likely to see a dollar retested here in the 95 zone, or even a little lower, so that means an outperformance of the euro, and behind it potentially an outperformance of the BTC if we ever consider that the BTC is valued in relation to the dollar in its very essence. In agreement, we are no longer in the ideology of a BTC equal to a BTC, but of the representation of the BTC as a refuge actor, and therefore compared in relation to the dollar. This is a reflection which is much more global, which I will not go further in this analysis, but in any case it is a reflection which we must keep in the long term. So, 12-month vision on Bitcoin. In logarithmic terms, very interesting to see three things. Why am I showing you here? It's that one. Already, systematically, we always have our bear market, which is here, in one candle. Okay, a year in which we have a very big drop. Then we have a year of stabilization, which closes higher, and then we start again. Okay? Same. Stabilization, close higher, and then we start again. Same here, stabilization, close higher. Except that we note two things. It's just one thing. We still have something that is much more bullish than that, or that, all right? Understand that here we have a wick at the bottom, in which this wick at the bottom has been swallowed, and we have closed the top. So that means that we had a very violent bearish breakout, and then we started to rise again. Same, here it's the opposite. It implies that we have a wick at the top which has been trimmed to close above. So that means that we have broken an acceleration by, in particular, here it is the COVID crisis, but by a downward acceleration, and therefore there we have, in fact, the very strong establishment of a possibility of failure, reacceleration. Are we in this diagram? I want to tell you no. Look at this candle. We have a candle which is very full, and even to see it clearly, we are going to blow up the logarithmic. It's really interesting. We still have a candle which is very full, and in which we are going to just go look at the rest to see clearly. This candle there, we're not even a third away. The same here, this candle, we're not even a third away. There, we still filled on the candle of the previous year, on this year 2022, which was just horrible, we still almost filled 80. So, no more 80. So imagine that there, we have a momentum which is very bullish, which is still very strong. We have a year of 2023, which was really powerful. Despite everything that happened around regulation, around the SEC, behind it, geopolitical risks. And of course the BlackRock ETF which has arrived. So we have a year which has been very, very strong in emotions, very strong in acceleration, and that is rather really very, very bullish. Really very bullish. That doesn't mean that we can't have a very sharp retracement on 2024 to start again very strongly at the start of 2024. We can very well have a schematic of having a wick which sinks. We will perhaps do it here so that we can see it. But we open here, we have a wick which sinks. We swallow the wick and we start again like that. That could be completely classic. With here a violent retracement, and then we start again and we close on the rise and we go on the bull run. It's something which can really be possible. We just have to consider that here we have a momentum which is sufficiently bullish from the start, after our bear market phase, therefore in the pre-Ull run phase while we have not yet made the halving. So that means we have attention, which is given at the level of cryptos and at the level of BTC, which is, we are not going to hide it, driven by two things. It is one, that we have a phase of regulation which is rather solid, therefore a phase of loss of uncertainty in the crypto market, and next to it we have the ETFs which are arriving. Therefore an addition of liquidity. We must not hide the fact that it will be a money machine that will enter crypto and BTC. Will it happen overnight? I don't think so, but in any case in a cycle in which we have massive communication, we have a search for Bitcoin which is increasing on Google. I can tell you that there it will be severe, and that's where it will be interesting, and that's where it may be explosive. And it is precisely this vision that I am trying to share with you. It is not because I have a vision which is very bullish, whether it is on the S&P 500 on the NASDAQ, on the next 2, 3, 4 years, the same on BTC, on 2024, 2025, 2026. That this means that we will inevitably start the year with an extraordinary acceleration and that it will be directly to the moon. Don't forget that the holder, the person who holds, that's how it is, okay? That's how to get to the rise. It's never like that. So understand that there, we are going to experience things. And we must not confuse a short-term, medium-term vision with a long-term vision. Here I am sharing with you my truly long-term vision. So understand that, we're going to take a little step back with the total market cap, which includes all of the cryptos, although a little less bullish. We see that it is still largely driven by BTC. It is BTC which has breathed much more. Here we are still very far from the 80. We are a little more than 55, which is rather positive. But we must take into consideration that this gives us indications that it is BTC which brought the market recovery to 2023 and not the whole cryptos, and that the alt season overall is relatively weak compared to what we have been able to know and compared to the general losses, which have been made on all altcoins, and it is the same. It can still be seen better when we take the total market 3, in which we see that unfortunately we are not even at 50. So that means that the altcoins have not yet really recovered from what happened. And that is where I tell you that my long-term vision is very bullish. But I think that we still have a lot to give and that we can take a lot before to be able to give more later. We must be prepared for all eventualities. If you haven't prepared all of this yet, don't forget that I have made available in the comments and description a guide to investing and trading 30 pages, which really consists of giving you everything you need to be able to prepare your strategy purchasing, your sales strategy. Understand the psychological biases that you're going to have during this bull run, and you're going to need preparation for them. Even if you've been here for 2 years following the channel, I can assure you that you're going to feel things you've never felt. Even if you have experienced the 2020-2021 bull run, this will be your second, and you will still feel things you have never felt. I can assure you because the first is always different from the second and the third. It starts to be almost identical to the second, but it's still different. So you have to be prepared for all that. That's why I made 2 videos for you at the end of the year. I'll put them at the end of the video. I really invite you to watch them. It's the main thing to really be able to prepare your strategy. Make multiples, define your targets, and be prepared for this year. 2024. I wish you all a very happy Monday, and we'll see you tomorrow for the daily, and we'll start again on a classic cycle. If you want to support me, don't forget to share the video, like, and comment. It always makes me very happy. And above all, it supports the work I do, and we'll see you tomorrow.